So what are mutual funds? So again, you can just read the definition and I'll explain afterwards. Well, a mutual fund is basically a big company, typically called an asset management company, which collects money from various small retail investors. Although it's not compulsory that they collect money from small investors and rich people can't invest. It's just that most probably middle class or people who don't have much money or who don't know much about stock market invest in mutual funds, because rich people usually invest in hedge funds. So mutual funds, after collecting money from investors, invest that money into various financial instruments such as bonds, stocks, derivatives, money market instruments, and similar other instruments. And they get units in return. Like when you invest in shares, you get shares. Similarly, when you invest in mutual funds, you get units in return. And these companies have fund managers who manages all the money by putting into some different financial classes or asset classes, which helps in managing risk. But simultaneously, they also look for profits. So these fund managers are experts in their fields and they took years to become fund managers. So they obviously know what they are doing. And finally, these mutual funds charges a fee for managing your money. And that's essentially what a mutual fund is. So you can see this picture. Just take a look at this pic and then you will better be able to understand what a mutual fund is or how does it operate. So in a nutshell, they take money from investors. Investors then gets the units in proportion to the amount invested. Fund manager manages the money. He or she invests them into different securities such as stocks, bonds, or any other financial instrument. Next is the returns that are generated, either profit or loss, by investing the money is passed on to the investors. And finally, mutual funds charges are specified fees for doing all the activities which I just told you about. So you can just pause the video for a bit and take a deep look at this picture so that you better understand what I just said. Now coming to the advantages of mutual funds. So the first advantage is professional management. So as I told you, these companies have got fund managers and it took years for them to reach the stage of fund manager. So they are quite experienced and know the nitty-gritty of stock market. Although it doesn't guarantee that they are gonna earn profits, but still they are better than most of the people. And also people usually don't have time for investing into stock market and going through that difficult learning phase in order to earn money. So they go for the mutual fund way. Mutual funds have both the time and the expertise to manage the money, which usually small investors doesn't have. And that is a great advantage. Second is diversification. Diversification is basically investing in different securities to reduce the risk of losing money. Like the age-old advice, not putting all your eggs in one basket. And mutual funds take this advice quite seriously. Mutual fund invests in various stocks to reduce that risk and also in different asset classes such as bonds, commercial paper, certificates of deposits and other fixed income instruments, which substantially reduces the risk as compared to investing all your money in common stocks. And an investor who wants to earn money from stock market but don't have a large amount to invest gets the benefit of diversification. Third is transaction cost. So you must have heard about economies of scale, which typically means that when you do something at a large scale, like producing a product, the cost of it decreases substantially. Likewise, mutual funds, unlike individual investors, buy securities on large scale. It has a lot of money, so it does not usually buy 1 or 2 shares, but they massively buy, which reduces their transaction cost. and the benefit of cost reduction is obviously passed on to investors. So that's another advantage. And one more is good returns. Mutual funds are emerging as popular way to invest your money. So in the last 10 to 20 years, there has been a tremendous rise in this industry due to their risk and return favorability. Mutual funds have also given better returns as compared to gold and regular bank deposits. Although it depends from mutual fund to mutual fund, but the best ones have always outperformed many asset classes. Now let's just focus on some disadvantages also. So the first one is high cost. Although mutual funds pass on the benefit of transaction cost to the investors, but overall they include many costs that the investor has to bear, which makes investing in mutual funds an expensive proposition. Because the thing is, there are various costs involved in mutual funds, such as management fee, distribution charges, securities transaction fee, shareholder transaction fees, and fund service charges, and similar other charges. So all these costs add up, and finally the returns that fund managers earn gets reduced due to the high costs. And the second disadvantage is over-diversification. Mutual funds are often caught into the trap of over-diversifying into various securities. In order to manage risk, returns are reduced to a great extent because fund managers invest in different stocks in different industries and also in different asset classes like bonds. So a bit of this, a bit of that only gives a bit of return. Most fund managers invest in hundreds of stocks, and most of the time index itself has less stocks than mutual funds. So mutual funds turn their advantage into disadvantage. So these were all of the things that I thought you need to know about a mutual fund, some advantages and some disadvantages. And if you have any doubts, then ask me in the discussion forum.